Live from the studios of Town Square Media in Northfield, it's Hurley in the Morning on WPG Talk Radio 104.1.
Hey, thanks very much. Welcome back. 5 minutes past the hour. It's why I tell you all the time, listen as much as you can. It's the fastest 4 hours and 6 minutes in media, and you never know what's going to happen next. Here's the beautiful thing, because I have a wonderful executive program director in Chris Coleman. If you missed my interview, and it was an exclusive, it was tour de force, and we covered every issue that I think any journalist in America would have wanted to ask Governor Chris Christie. Are you staying? Will you be taking a position in the Trump cabinet? Bridgegate, did it hurt you? Did it hurt your run for president? He talked all about, he shared things, I think, for the first time. That interview of the last 40 minutes broke ground here today. There's no doubt about it. You can hear the entire interview later this morning at WPGTalkRadio.com. Chris Coleman, thank you very much. This portion of our program brought to us by Chuck Malamut. He is our official financial advisor to the Hurley in the Morning program in our 26th year together. Chuck is the managing director. He leads his team, the Malamut Group, at Morgan Stanley's Northfield office. I think he's still bowing before me in my Trump rally, pronouncement. 609-383-2010. Chuck's laughing, sort of. It's more of a smirk. 609-383-2010, the number to reach Chuck and his team. And the following program that you will melodiously listen to, presented by Chuck, who is a financial advisor at Morgan Stanley, because the information, views, and opinions that you will hear on this broadcast are those of Chuck. They do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley, Smith Barney, member SIPC. And without further ado, Chuck, good morning. And yes, you can bow before me because it has been a 6-day Trump rally. Thank you.
Good morning, Harry. Hey,
I'm happy to help, Chuck.
Excellent interview this morning.
I got to tell you, I'm pinching myself still because I honestly don't believe anybody else in the state could have landed that interview. I don't think he would have done that interview anywhere else. And I'm very proud of my station today, WPG, and I'm very proud of the Hurley in the Morning brand.
Harry, you covered a lot of ground. I don't want to throw cold water on anything here because you did accomplish a lot, and it's still a relatively short period of time. But I didn't hear anything in there about the state of the debt ratings with respect to the state of New Jersey. Did I miss that, or was
Chuck,
that not covered?
I didn't have time to cover every single issue. I'm sorry I missed that one.
Well, unfortunately, Harry, yesterday, as it turns out, another one of the rating agencies initiated another downgrade to the debt on the state of New Jersey, the traditional GOs, or general obligations, as it's referred to. So right now, with that downgrade, we are neck and neck, and actually in front of Illinois, not in a good way. And a lot of this is due to that, overhang with the pension liabilities that, continue to escalate and are not declining over time. So I just wanted to kind of throw that out there for your listeners, how important it is, when you're buying debt or investing in debt, that you clearly understand, what you're buying and why you're buying it. It's sort of like buyer beware. We've had just an exceptional rally that we'll kind of talk about here in a second as to what has happened and why. But it is, the old expression, a rising tide lifts all boats. It's not necessarily the case here. And I think it's something that your listeners need to be, very, very conscious of. And the fact that we had just a huge move in interest rates, particularly in the 10-year and the 30-year, in a relatively short period of time. So inflation could be coming back. Interest rates, one of the Fed presidents this morning, basically said that, hey, we're not going to let anything get in our way. We're going to make a move in December. So the market has already anticipated that 25 basis points, movement. The question is, once you get beyond that, what happens next? I mean, are we in store for multiple rate hikes in 2017? Only time will tell.
Chuck, let me just take a moment. This is something you can appreciate as the man that I modeled my career as a senior hotel executive after, and I still say to this day, even though I was very good, you were the best hotel executive in the history of the Atlantic City casino gaming market, and I think I was successful because you taught me the business. I didn't know the business. You went to school for it. You were the best that ever was, and this is something you and I in a former life would be all over, and that's the fact that the Atlantic City Convention Center welcomes 22,000 exhibitors and delegates for the largest municipal gathering in the country. This is an event that will generate more than 8,200 room nights and more than $13 million in delegate spending for Atlantic City, and it is the New Jersey State League of Municipalities. It also, not only their 101st annual conference and gathering, but it's 3 days of really amazing stuff. And this is always the day that PolitickerNJ.com, now Observer, PolitickerNJ.com, releases their top 100 list. And so that'll be coming out, I guess, at some point today. So we welcome everybody that's gathering, and I know a lot of them are political junkies and have listened to Early in the Morning, both here when they're in town and also on our stream when they're in other parts of the state and around the country. So we welcome everybody involved with the League of Municipality and have a great gathering. That would be
Harry,
a big deal for us.
That was and still is, obviously it's a very big deal, and the fact of the matter is that the ballot question was defeated in such big numbers is great news for Atlantic City, for the no casinos in North Jersey. I don't think, Harry, and I mean, correct, I'm wrong a lot, but I think it's going to take a lot to get that ballot question back on in the next 2 years. So I think that investors that were, seriously considering Atlantic City are just sort of sitting on the sidelines waiting. Hopefully this will be the impetus that is needed to get them back in the game, so to speak, so the redevelopment of this town can continue, because I think we're just doing some really, really great things down with Stockton and Albany Avenue, and hopefully we can get that pushed forward up into the boardwalk into the north side of the town. And
Chuck, not only are you not wrong about that assessment, I believe you're absolutely right, and those are the reasons why Mark Giantonio and Morris Bailey and Joe Kelly and everybody that was involved in the Vote No movement. Early in the Morning as a program, we went all in because we knew this was the salvation of our region, and ultimately it would have been very, very bad for the state. And we all were on the same page, and it is one of those moments where I like to remind people that when we're all together, we're really unstoppable, Chuck. And I know you remember this, how many times I have said on this program and anywhere that I would speak on this topic around the state, that and I went outside the state because I did shows in Delaware that were played all throughout Pennsylvania and Delaware and New Jersey because I knew how important this question was. And not only beating the question, but the margin of victory was as important as beating the question. And when you beat something 80% to 20%, you just about drive a stake through its heart.
Well, Harry, if I read correctly, this was from the time that ballot questions were ever presented to the voters of the state of New Jersey, this was the most lopsided victory
in history.
It
is.
So having said that, what do you think those that were looking for the yes vote for North Jersey casinos are thinking about at this point in time, and can they come back?
I've sort of use the analogy of the monster movies with the famous monsters that you think you've killed them and they always come back for a sequel. Would we ever have believed that from the McGreevy era, from the ash heap of that whole debacle, and I don't mean that personally about Jim, who's a friend, but just that whole era of trying to spin video lottery terminals into that they're not a slot machine, how would believe that would come back? And we have an assemblyman who was an Atlantic City Gaming and hotel employee who moved to another part of the state, who is actually trying to push video lottery terminals. So is it done forever? I don't trust anything anymore that it's done forever, but it's done for a long time to come because $10, $15 million will not line up in 2 years on a question that got its ass beat 80% to 20%.
Oh, absolutely, Harry. And I think that it's going to be several years before it does, in fact, if it does, in fact, come back.
Yeah, and I don't think it will anytime soon. Chuck, we're going to take our first break. When we come back, I'm going to take a little victory lap around the studio. I'll just run it like 3 or 4 times around Chuck. I'll do circles and do a couple victory laps because we predicted the Trump rally. I knew all that mess that was being talked about in the Dow futures. Oh, no, it's down 100, it's down 200, it's down 500, it's down 800. It has been a 6-day Trump rally. Nobody can deny that. I'm not saying that Chuck will try to, but we will talk about the market update with Chuck next, and certainly the Trump rally as well. And again, for all of your financial planning needs, turn to Chuck Malamut, the official exclusive financial advisor to the Early in the Morning program. And you can reach Chuck and his team, the Malamut Group, at 609-383-2010. Hey, thanks very much. 20 minutes past the hour. I want to send a shout-out to my wife, Margie. Last night we were in, northeast Pennsylvania for the viewing of Margie's uncle, Jim, who was a beautiful man. He made it to just about 81 years old, just a couple months shy of 81 years old. And I know Margie's on her way to the funeral today. So just want to send my thoughts and prayers. It was an incredible turnout, a lot of beautiful people, wonderful family, and there's no question that Jim McGee was loved. The turnout was incredible, intergenerational, and just absolutely voluminous, the turnout. So deepest condolences to the Finneran and to the McGee family and to Margie, and be safe. Chuck, market update, and at some point, please, you don't have to bow before me or anything, but please do use the words "the Trump rally" at some point in the next 2 minutes.
Well, Harry, look, I congratulated you multiple times.
But it's really true now. It's 6 days.
When we spoke briefly on Wednesday. But I will say it again. Harry, you were obviously one of the biggest Trump supporters and took a lot of heat over it. So congratulations again.
Thank you. Now say those 3. I know you were almost going to throw up in your mouth. Now say those 3 beautiful words: the Trump rally.
Well, it's now being referred to get on the Trump train.
I love it.
So
yeah,
Harry, you think about what had transpired on Tuesday evening, and I think we really need to take a step back and kind of look at not minute by minute as to what actually happened, but
and by the way, please remember to mention the consortium that should be fired that puts together the 5 p.m. exit polling dump that then completely coerces and steers the entire national media into who is going to win, even with the polls still open for 3 more hours. That consortium, Chuck, should be fired.
Harry, absolutely. I mean, obviously the voters, went to the polls. You had a lot of that, what I'll call silent majority that said virtually nothing over the entire campaign and went in and voted.
Exactly.
And you look at I think I kiddingly sent to you a map of the U.S. that had
better coverage than Verizon. Yes,
that basically had all the red on the map.
Can you hear me now?
Yes. So yeah, the coverage was just incredible. But let's think about this for a second. Brexit.
Yes.
Brexit took several days to get investors back on their feet again. But what had happened, with the Donald Trump, I'll call the Republican phenomena, I guess is the best way to call it, is that the fact that he's maybe going to govern a little more moderately than he campaigned. He said that, Harry, in his acceptance speech. He said that, and the Democrats actually, embraced him to a certain degree, I guess to the best that they could. So he's going to inherit, Harry, at this point in time, a fairly healthy economy. And I'm not going to say healthy, but fairly healthy economy. We do have a lot of income inequality that's, that we've talked about for years.
Chuck, imagine if he comes in, and I'm going to stipulate that what you said I totally agree with. Imagine if he does some of the things that he said, lowers some taxes, lowers some tax rates, encourages that I've never heard a straight number on it. I think you've called it over $5 trillion at times. That's sort of the number that I go with, but anywhere from $3 to $5 trillion that's been parked outside of this country. Imagine if he does just what he said, and now, of course, something that I don't think the markets will be ultimately opposed to, the fact that one party has total control now, that they can actually do what they said they were going to do. These markets may just go just wonderfully.
Well, Harry, I think put it in perspective here. So let's take a step back. So he still has obviously a lot of challenging structural issues that we have to deal with, a weak labor force growth and weak productivity. And, we talk about that sub 3%.
It's all stuff I'm talking about.
So now, the policies are generally pro-growth that have been put in place. We talked about that rate increase. It's going to probably happen in December. That's still on the table. Equities will probably outperform fixed income because if you take a look at what happened to fixed income from Tuesday night, I mean, the fact that you moved 37 basis points on the 10 and the 30 year in basically a day or two rattles a lot of fixed income investors saying, well, I thought I'm buying safe investments. Well, you are. But remember, it's like anything else. You're always going to be, subject, to market risk. So, the lesson to be learned here is something, Harry, that we've always talked about for the last 25 plus years is the fact you need to have a well-diversified portfolio. You've made big moves in the S&P and the Dow, and unfortunately, what has happened, you're continuing to see what I'll call the asset movement and the rebalancing of portfolios as a lot of institutional money managers and retail investors at the same time are now, Harry, abandoning, the FANG stocks, the Facebooks, the Amazons, the Netflix, the Googles, and at the expense of the financials. I mean, last week alone, financials were the best performing sector of the S&P 500, up over 11.5%. So you look at the banks, you look at the brokerages, you look at the regionals, and and the fact of the matter is, you think about the rally that we've had for any of these years since we came out of the Great Recession. What was the one sector that continued year in, year out not to perform? Because a lot of the regulatory issues that was heaped upon these financial institutions, basically financials always underperformed. So now the fact that they're being recognized and you might get some regulatory relief and interest rates can go higher, which will help the spread margins, which will create more profit to the banks. It wasn't tough to figure out that this was potentially going to happen. I think a lot of investors, Harry, be very, very disappointed when they look either online or their statements, and because they've owned these a lot of these big growth companies that we just mentioned, the FANG stocks, and they have an overweight there and they have an underweight in your traditional infrastructure, financials, healthcare. And they're saying, well, wait a minute, the market went up, but my portfolio is either, unchanged or slightly down. Like, what's going on? So, again, a lesson to be learned there, Harry. You need to understand why you own it, when you bought it, why you own it, and how long you're going to own it for.
How surprised do you believe the markets were with how instantaneously the Trump uncertainty of just hours before turned into now a 6-day Trump rally?
Harry, I'm looking at an incredible chart that I actually sent to you last night that looks at the election. The S&P 500 trading
while
during
the returns were coming.
Yeah. So what happened was, early on, Michigan, Wisconsin, Pennsylvania, Florida, New Hampshire, New York, Nevada, and Virginia were too close to call. Okay. So the market was, peaking then early and then went through this incredible decline. And at midnight, what was happening, Trump had 244 electoral votes. Clinton had 209, with 82 undecided and 3 that were not allocated.
Hey, by the way, Chuck, would our markets have to become more sophisticated in 4 years from now? Because this always gets forgotten. Then we repeat it 4 years later. These exit polls have been wrong for a long time. Markets were actually in off-hour trading and off-hour analyses. It was going on the news that Hillary Clinton was going to be the president because that's what all the announcers were saying. Let me finish this one thought, and I'll turn it right back to you. Some of those states were not too close to call. The networks decided they were too early to call. Different language. Too close to call. I mean, oh, my God, I don't know who's going to win. It was just too early to call.
Yeah, so the Monday rally in advance of the Tuesday election was what we'll describe as the Hillary Clinton rally.
But wasn't it? I don't know.
No, the Monday before. Yeah, that was
absolutely.
Right. So
absolutely. I thought you meant the
no.
day
So then you look at this chart and the market is tanking. You're down 800 points. I mean, it's like you're pulling clumps of hair out of your head every time the market moves, and it's moving down, in 50-point intervals. Now, the beauty for us is that most of us were either, if we were awake and watching, you couldn't trade those futures, so you saved a lot of money because. Yes. At the worst point during the evening.
Oh, if they would have been coming in during trading hours.
Yeah, I mean, the S&P was down over 5% at its worst level. So then, what happened was, Pennsylvania moved in favor of Trump, which basically, sort of cemented his victory, and then he made his victory speech. Or his acceptance speech, and I think it was
didn't that help markets?
Oh, absolutely, because I think at that point in time he really again was presidential.
He felt the magnitude of
and I think he understood the moment and how important the moment was at the time, and the fact that he is now responsible, to create the right people, surround the right people around him, and get this country on track. And I think, Harry, what we have seen as a result of that is this ongoing positive momentum where there was so much cash sitting on the sidelines, it needed to find a home. I would, if you're a fixed income investor, I would certainly not abandon that. You now have an opportunity, if you have cash and you are a fixed income buyer, to buy assets that are priced down 3 to 5% from where they were, say, 7 to 10 days ago. So it's not necessarily a bad thing. And, for those of you that are actively engaged in the market, or you own mutual funds or separately managed accounts or ETFs, you need to understand what those respective managers are and what they're doing.
We're going to take a brief time out. Coming back in a few minutes, 32 minutes past the hour. Chuck Malamut, the official financial advisor for the Hurley in the Morning program. Chuck and his group, the Malamut Group at Morgan Stanley's Northfield office, are standing by for all of your financial planning needs. Turn to Chuck. You will thank me for it. Believe me when I tell you, his attention to detail and his perfected concept of total asset management, coupled with the all-important asset allocation, truly has it's endured the test of time for decades, basically close to 3 decades that Chuck has been doing this. 609-383-2010, 609-383-2010. We're going to be right back, and Chuck's going to tell us what he means by the Trump rotation. We'll talk interest rates a little further, and we'll talk about the political and the investment themes as we continue with Chuck in just a few minutes. This portion of our program brought to us in part by the Harbor Pines Golf Club, the exclusive golf club to the Hurley in the Morning program, owned by the legendary Gerwicks family. They're at 500 St. Andrews Drive in Egg Harbor Township. Let me share with you something that's happening. Not only is Harbor Pines open for Thanksgiving, it's a spectacular day at Harbor Pines. The course will be open on Thanksgiving Day, Thursday, November 24th, coming up before you know it. 9:30 a.m. shotgun, $45 for 18 holes, $25 for 9 holes. Members pay only a cart fee on Thanksgiving. You can call the Pro Shop directly to reserve your spot, 609-927-0006 at extension 10. You can also email Chris Doyle as well, and his email is right on the website at harborpines.com. How about this one? The 2017 Harbor Pines 10-round card early bird special. I think that's a typo. I thought it was Hurley Bird special. But the normal price is $495. The Hurley Bird Special is $450, and it's a limited item. And right now there's 20 or so days left for you to purchase this. And again, you can do so at the website, harborpines.com, and there's a Buy It Now feature right there. Or if you want to speak to somebody to do it with someone with personal service, 609-927-0006. Harbor Pines Golf Club, 500 St. Andrews Drive in Egg Harbor Township. Tell them that Hurley in the Morning sent you. We continue with Chuck Malamut, our very own official financial advisor for the Hurley in the Morning program, Hurley in the Morning charity. And you can do the same. Choose Chuck and his team, the Malamut Group. 609-383-2010 is their phone number. A reminder, and Chuck, you are one of the annual contributors all 3 years that we've done this. The Town Square Media, Atlantic City, all 5 of our radio stations here, Light Rock 96.9, Cat Country 107.3, Sojo 104.9, ESPN 97.3 FM, and WPG Talk Radio 104.1 FM, 1450 AM. All of us together worked as a team, as we always do, and raised a whole lot of money, 5 figures worth of money. Chuck, you've always been with us all 3 years that we've done this, and now the blessings of the Feed a Family meal distribution, which will be taking place 1 week from today right here at Broadcast Center, 950 Tilton Road. And if you go, starting today at 12 noon, if you go to WPGTalkRadio.com, on the upper right-hand side of the website, you will see the hyperlink to how you sign up to then have a full Thanksgiving dinner put aside for you to pick up in a window of time. We're having 3 different distribution windows of 2 hours each, and you'll know when to come on Tuesday, exactly what window of time. And to everybody that contributed, Chuck, and I say thank you to you because you've always been a big, big part of this each and every year. And it's amazing that we have hundreds of families that are hurting right now, but thank goodness this community really comes together to do this.
Harry, happy to help, and hopefully, I know you'll continue this on an annual basis, but maybe as we in Atlantic City and the local area get firmer footing, so to speak, with what happened with the casino, a vote no. Hopefully next year,
less of this will be necessary.
Yeah, wouldn't that be a nice thing?
It'd be nice to not need to do it.
Mm-hmm.
So thanks to everybody. Chuck, thanks you so much for what you did, and to everybody that stepped up and contributed. Political and investment themes.
Yeah,
Chuck.
So Harry, this is going to be right up your alley. And I know that you're going to, listen intently and make lots of notes because you'll, I think, bring it in on a day-to-day basis. But a couple things to consider here. So it's pretty obvious to see what happened with the equity markets. Very, very positive towards the victory, at least for now. The reason I say for now is, Harry, you need to clearly understand that there will be volatility along the way. This is not going to be, just a straight up movement that we exhibited, over the last week or so. I think for the market to remain healthy, you do need to take a few steps backwards and ultimately build that base, to move forward in an upward direction. Now, what the markets had done prior to last Tuesday night is that they had put in the probability, or priced in the probability of a divided government. As you had mentioned, earlier this morning, the GOP sweep, is probably going to be better politically, at least the environment for corporations. We talked about tax reform. We talked about deregulation. And one of the things that we kind of harped on for the last 8 years was the fact that, government, was always in your pocket, looking to get paid first and foremost, no matter how successful or unsuccessful your businesses were. So we're looking at that acceleration, and hopefully we push through that 3% GDP, which is sort of that magic number. So we did chat a little bit about bonds and bond yields. So, over the summer, we hit that low point on the 10-year Treasury, which as of this weekend and actually through yesterday was up over 80 basis points. We went into Monday at 2.15. I think yesterday we were like maybe 2.2, and actually went to, I think, to 2.3 at one point in time. Half of the increase that we saw, Harry, from the summer lows were put in last week. Higher rates, you know what happens. Typically, what does it point to? Rising inflation expectations, and a possibility of more debt issuance as we seriously look at repairing the infrastructure, and expectations that the Fed is going to be a little more hawkish, as we see, through the next several meetings.
Have markets given any consideration to the fact that it appears, but I know Donald Trump, so he doesn't go after people. Once it's over, it's kind of over with him, even though people think that he's vindictive. He really isn't. He battles tough, and when it's over, he typically compliments, like he did Secretary Clinton, like he did the president, when he said all nice things once the campaign's over. But I think there's probably people, both in financial circles and even outside, that just observe, that think that maybe the Fed chair, Janet Yellen, is not on very firm ground with the incoming president. Are markets spooked at all by that?
No, I don't think they're spooked, because I think the consensus is that he will let her serve her term, and then appoint someone else. And I believe that's 2018, Harry, if my memory serves me correctly. I could be wrong with that. So as we look into next year, obviously, where is Trump going to focus his efforts? And the markets are going to take a cue from him. I mean, tax reform, a big issue. There's similar issues that are going to also be a plus for corporate earnings and potentially equity prices. But on the flip side, Harry, if he focuses his efforts on trade and immigration policies, it could be negative for growth and ultimately negative for stock prices. So I think we're going to kind of have to sit and wait and see what he does.
How surprised do you think markets are that literally the Trump rally was instantaneous? Because I initially compared it to when President Reagan won, and markets were the same deal. I remember it vividly. I was younger, but I remember the markets wanted the known and not the unknown. Nothing's changed there. The known was the incumbent president, even though he wasn't good for anything economic at all, but the known versus the unknown. And it took some time for Reaganomics, lowering taxes, lowering tax rates, increasing job creation, and all these different things, lowering tax rates, I think I said, but I want to make sure I said it. And then look what happened. We boomed in the peacetime expansion, the likes of which were record-setting, and we've never seen them before or since. But yet the Trump rally was like right after his speech.
Harry, is nothing short of incredible. Do
you think things move quicker now? Is that part of it?
There's no doubt about it. You think about the technology that we now have at our fingertips versus what we had, say, even 5, 7, 10 years ago. The information flow comes so very, very quickly, and I think oftentimes somewhat detrimental, because we get the information so fast, and we can, I'm going to get off track here a little bit. You talk about our children. And, in that generation, I think they are just so overwhelmed with all of this information and information overload. It oftentimes creates, issues and problems for those. I'll still refer to them as young adults or kids. But that's a conversation for another day. So the first 100 days, what's going to happen here? Trump has limited political capital. And he's going to obviously need to prioritize what he's going to do.
Why do you say that was so definitive how you said that? Why do you say limited?
Because what happens is he has so much to do, and he's building these bridges, and you still sense there are some that have not gotten on the bus or the train.
Yep, Trump train.
And there are some that are getting on very, very begrudgingly. But what's going to happen?
How big a deal is it that for the first time in at least a decade, and it happens very infrequently, one party has control of it all? It's
pretty incredible. So here's what's going to so think about what's on his plate. He's got He's talked about replacing Obamacare and how important that is. He's talked about tax reform. He's talked about the judicial appointments, which is a whole other discussion. Deregulation, infrastructure spending, which both he and his opponent talked about. Immigration, trade policies, and so what's he going to do, and how is he going to do it? And I think, depending upon his success, the markets will take their cue from him and move accordingly. Now, if Washington does in fact adopt this pro-growth initiatives that we've talked about, we're going to see a breakout in U.S. economic growth. I mean, we've been, hanging around.
They have to do it. They have to.
You think about it. Since the end of the Great Recession, growth has averaged at best 2% due to low productivity, sluggish wage growth. So if you get these corporate tax rates reduced, that is going to, in fact, increase productivity, profits, and obviously, all of our personal income. Deregulation, Harry, could enhance, business investment, additional infrastructure spending, which desperately is needed all throughout the country, is going to act as a economic tailwind as well. So all good stuff, but it's a matter of being able to prioritize what's going to happen. Tax reform is going to probably happen in 2017, hopefully earlier in the year rather than later. Corporate tax reform is on the top of his list. He's talked about it, and the Congress has talked about it as well. We're expecting that the Republicans will work with the Democrats on a comprehensive plan that includes individual tax reforms. Remember, Trump had three tax rates. And they're going to also look to pass some legislation without using the budget process. So, will the
markets be affected much by who Trump names as his Treasury Secretary?
I think the markets
say it was
will.
Carl
Yeah,
Icahn, or I won't even throw out names. They will care about.
Well,
that.
I think there's been discussion. Jamie Dimon, the CEO of J.P. Morgan, which I think would be I won't comment on my thought process.
I'll say it.
But
not good.
No. I think Jamie
good?
Dimon better than Carl Icahn.
Oh, okay. Well,
on a comparative basis,
institutional experience. Yeah.
So as we get through all this, the hospital stocks last week got absolutely punished. Meantime,
because of Obamacare.
Yeah. Meantime, the healthcare industry did relatively well. Financials did well. Infrastructure did well. Industrials did well. And, what dragged utilities, interest rate sensitive, and consumer staples. So, obviously Trump is unpredictable. He's unconventional, compared to other presidents in modern history. So I think he has come a long way in a relatively short period of time and can lead us, into the future. But what happens is, because you have these unknowns, it will create volatility in the marketplace.
Spectacular, Chuck. Until next week, and I'm hoping Chuck will make the trip and join us at the Atlantic City Aquarium during our special live remote. But that's Chuck's call.
Harry, thanks for having me. We'll talk with you soon.
You got it,
Take
my man.
care.
Chuck Malamut and his group for all of your financial planning needs. 609-383-2010. Tell them Hurley in the Morning sent you. Back in a few minutes.